So Autodesk, so they're the company that makes AutoCAD software, gets paid from customers an average of net 56 days. So on average, they get their bills paid 56 days from when they send out their invoice. How fast does that compare to how they pay their suppliers? Do they pay their suppliers the same? Do they pay their suppliers 15 days faster? Do they pay their suppliers 30 days slower? Or do they pay their suppliers 65 days slower?
C.
30 days slower? Actually, D. So, if you're negotiating with Autodesk, and either as a buyer or as a salesperson. So as a buyer, what's my ethical argument against accepting, net 120-day terms from Autodesk?
That's not what their expectation is from the customer.
Yeah, you're getting paid in 56 days. Why should I be on net 120? Because that's essentially what they're asking you to be on, is net 120. They're saying, no, pay me at least net 60 or net 45, because that's what you're getting paid. And if I'm a salesperson, and they want us to be paid faster than our current terms, and I say no, or they want to pay me slower than what they're saying, what do I do then? What's my ethical argument? Why am I acting as a bank? So I'm going to pay you in 56 days, and you're going to turn around and pay your suppliers in 120 days? Why am I funding your operations? Why am I acting as a bank to you? Completely ethical argument using the data that's publicly available. So how do we get this data? We'll go a little bit more into that, but there's two things. There's a profit and loss statement, and there's a balance sheet statement. So we do what's called a days sales outstanding, DSO. What that essentially means is you look at your accounts receivable. So on the balance sheet, your accounts receivable is money that's owed to you that you just haven't collected yet. So that's your accounts receivable, and that shows up on the balance sheet. But then you divide that by how much revenue you make in the year. And you multiply that by 365 days, and that essentially gives you an idea of, and more of this is in the book a little bit later, so don't worry.
Okay.
So what it's giving you is, it's telling you on average, how long does it take for them to collect the money that's owed to them? So in this case, we take the 842 of quarterly revenue, we multiply it by 4 to turn quarterly revenue into annual revenue. And we've got the days receivable, the accounts receivable, we divide that by the revenue, and then we multiply it by 365. That gets us the 56 days. So on average, it's taking them 56 days to collect. So they probably have mostly a bunch of net 60 contracts and a couple net 45 contracts, so it's working out that way. Days payable is similar, except we use accounts payable. So this is money that I owe to a supplier that I haven't paid out yet. So I've got the invoice, I owe them the money, but I haven't collected it yet. And I do the same thing, except instead of dividing it by revenue, I divide it by my cost of goods sold. And this gets me a good metric for how long it takes for me to pay a supplier. So same type of thing, I have the cost of goods sold annualized, I pull the payables from my balance sheet, and that's how I collect it. And again, this is a really good way of pushing back on payment terms. Either pushing for a supplier to accept the payment terms you want, or pushing back against it, right? Depends on how the data comes out, depends on what it's showing, but using this alone, it's going to be a lot easier to push back and say, hey, I don't know why I should be paying you faster, or I don't know why you should be paying me slower if you're not doing this with everybody else. So it's kind of a way, and again, this really only works for public companies. One of the things that we do for private companies is sometimes we'll go onto their supplier portal, even if they're a private company, and they'll have their standard supplier payment terms. And usually those are pretty aggressive. So especially on the sales side or on the buying side, it's easier because you can say, hey, your standard terms are net 90, so why shouldn't you accept net 90 for me as well? It's a good ethical, reasonable argument to make to push back on.